Science is the great antidote to the poison of enthusiasm and superstition. Hi, I'm Juliet Selgren, and this is my podcast, The Great Antidote, named for Adam Smith, brought to you by Liberty Fund. To learn more, visit www.adamsmithworks.org. Welcome back. Today, on March 15th, 2023, we're going to be talking about the Federal Housing Finance Agency, which is pretty new, and the mortgage industry. I'm excited to host Mark Calabria on this topic because he was the director of the Federal Housing Finance Agency, and prior to that, he spent 8 years as the director of Financial Regulation Studies at Cato, and he also served as a senior aide on the Senate Committee on Banking, Housing, and Urban Affairs. Now he's a senior advisor to the Cato Institute and recently is having a new book come out. I think it's on this Friday, right?
Just released on the 14th.
Oh, yesterday. Called Shelter from the Storm. I'm excited to be talking to you about this today. You have a ton of experience, and I'm happy that you can share it with us. So welcome to the podcast.
Delighted to be here. Pleasure.
So before we jump in, what is the most important thing that people my age or in my generation should know that we don't?
I'll make 2 points. One, from my experience in government, I certainly started out at a point in my 20s very cynical and frustrated and skeptical that one person, against the system could make a difference. And what I've seen over my course of my career is, yes, in many instances, I've really been impressed and amazed at the ability of one person in the right place at the right time to steer things in the right direction. So don't be discouraged about the occasional frustrations with the system. Keep trying, keep being involved is lesson number one. And relatedly, a reminder that nobody is born a good public speaker, but that the person on the podium, the person in front of the crowd, is often viewed as the expert. And so as somebody who really is fundamentally an introvert, I really couldn't too much encourage people to force yourself to be a little more extroverted, and not really care too much about how, whether you fall or not the first time around. Just get up there, get in front of people, practice. But communication skills are just so crucial, including writing, but particularly verbal communication skills are just so critical to whatever you may end up doing in life.
That's some great advice. I'd like to think that podcasting has kind of helped me become
absolutely.
a bit more extroverted, but it only works out sometimes because at the end of the day, I'm an introvert. But Shelter from the Storm. Why did you name it that? Why did you write this book? And what were you trying to achieve?
Wow. Let me start to unpeel that onion a little bit. So let's start. Let's start with why I wrote it. I think that there is. Well, I guess I should say. Every author to some extent is probably motivated by ego. So I'll be upfront and say, I think I performed an important public service during the pandemic and did so in a principled manner, and thought that since nobody else was going to tell my story, I needed to tell my own story, which may be another piece of advice. Tell your own story. Don't expect everybody else. Don't wait on anybody else to tell it for you. And so, A, there is that aspect of it. B, there's the aspect of, I believe it was a successful, principle-based, largely libertarian-informed response to a crisis. And I really have spent a lot of my career pushing back against this narrative that, quote, there are no libertarians in foxholes, or, as George W. Bush said in 2008, we had to abandon the free market to save it. Clearly, I think that's wrong. And I wanted to, I think I demonstrated that via actions, and I wanted to tell that story. And to my earlier point about making a difference, I also wanted to write a book that small government people, especially those younger, could read and say, I can actually make a difference in public service. There'll be some tough things. And I also wanted to have some advice there so that if you were to ever find yourself in a similar situation in an agency, or really even a large company, any sort of bureaucracy, that there are lessons you can learn to be successful. So getting the history right, but also more importantly, having future lessons for both crisis response, but also just general making a difference and having broader public policy impact.
That's a noble goal. And I mean, acknowledging that you think you did something good and that you should share it is honestly very, very, I don't know if I want to say refreshing, but it's kind of necessary because it's the thing everyone knows, but no one talks about. But it doesn't mean that sharing your story is any less valuable. So that's my 2 cents.
Yeah, and it's kind of back to my earlier point about introverts forcing themselves to be a little more extroverted. Certainly, over the course of my career, the hardest thing I've had to get comfortable with is self promotion. I think many of us rightly feel a little uncomfortable, a little icky, if you will, sometimes touting our own horns, and obviously because sometimes we see other people do it in a way that we think is a little gauche, but it's important. So, certainly important career advice is figure out how to tastefully self promote yourself. I'll leave it to others to decide whether I've achieved that.
So, financial markets, the mortgage industry, all of that stuff, it's pretty complicated, but you've been on the inside and on the outside. So, I'm guessing you have a different or more complex perspective on this area than the majority of people. So, from a regulatory standpoint, what is a financial regulator and what do you believe a financial regulator should be?
Great set of questions. And I will note that one of the themes of the book, and I feel like one of the themes of my career, is taking a principle, like getting to what the basic operating structure of something is. And of course, I have a PhD in economics from George Mason. I mean, and most of my graduate work was really kind of market structure, industrial organization, applied microeconomics. And so one thing I would say, it's actually, despite how often people knock on econ, it's a surprisingly extremely helpful framework for understanding the world. I have absolutely found that to be true in public policy. So a lot of my understanding of financial markets is really through my understanding of markets writ large. And I start to put those things in those boxes. And of course, the institutional details absolutely matter. And that's probably where a lot of academics fall short. But if you don't start with a theory of how something works, then you don't know how to arrange the details. And so if you start with the theory for financial regulator, that you have some sort of moral hazard created by generally some sort of government guarantee. And of course, the classic example of this is government provided deposit insurance, and which is, again, topical, in today's news, where you've created a moral hazard because depositors no longer need to care about, the risk of the institutions that they're lending, which they're placing their deposits. And so therefore, the role of the regulator is to substitute for the monitoring that the depositor would otherwise do. So, you have a very clear, here's my job controlling moral hazard created by the guarantee. And certainly Fannie and Freddie are in this gray world of implied guarantees, which are they there, are they not there, which is a whole different conversation. But if you start from thinking that the role of the regulator is to handle and to mitigate moral hazard created by either explicit or implicit guarantees, then it makes your job a lot easier. And of course, people, there's obviously a long running debates about, is it the job of financial regulators to help us transition to a net zero economy? Is it the job of financial regulators to reward some groups over others? And so there are obviously things that continue to get pushed into the remit of financial regulators. But if you really start out with, again, whether it's a financial regulator or a regulator writ large, that your job is to try to correct some sort of either market failure or government imposed distortion, it makes your job a lot easier because you can frame that. And of course, I'm at the Cato Institute, so even though I'm an economist, I am a fundamentally, Article 1 constitutionalist, which means Congress writes the rules. So one theme of the book, and one thing that makes your job a lot easier if you ever find yourself in government, is just to accept that it's not your role to second guess Congress. Your role is to carry out what Congress has passed and implemented. And of course, you can tell them whether it works or doesn't work. Whereas, my role at Cato in the past has been to say Congress should do X, Y, and Z. That was not my role at FHFA. My role was to carry out what Congress had already decided. And I would say in terms of for both libertarians and conservatives. If we could simply get agencies to follow the law as it's written, I would consider that a great improvement over the status quo.
So, to derail us a little bit, you mentioned Fannie and Freddie. Who are they?
Great question. So they are government-sponsored enterprises, so they're charters. And keep in mind that a typical company, may go to Delaware and get a corporate charter. Fannie and Freddie's corporate charters are granted directly by Congress, and their charters are to buy mortgages from lenders who originate their mortgages. So you and I cannot go directly to Fannie or Freddie and get a mortgage. What we would do is go to a Bank of America or some sort of non-bank lender or a credit union and get a mortgage, and then that entity would sell the mortgage on to Fannie and Freddie. Now, Fannie and Freddie were originally created. Fannie back in the 30s during the Great Depression, of course. Freddie much later. Were really meant to be, almost kind of a buyer of last resort of mortgages. The world that they grew out of was a world in which the old "It's a Wonderful Life," George Bailey, somebody makes a mortgage and it's held on the balance sheet. He really was meant that normal times you'd get a mortgage, the lender would hold it, and if the lender needed liquidity because its deposits were outflowing or there was a crisis or its mortgages were going bad and its capital was impaired, that it could get liquidity from Fannie and Freddie by selling off mortgages. And so it's the creation of what's called a secondary mortgage market. Now, we've created secondary markets rather in other assets like auto loans without a government, enterprise and without government intervention. So there is a wide securitization market for other assets, but mortgages really do dominate that part of the sector. And as I talk about in the book, I mean, mortgage-backed securities and mortgage-backed debt are second only to the U.S. Treasury market, and in fact, in 2020, ended up being larger. We slightly more mortgage-backed securities and debt related to the mortgage market was issued than even treasuries in 2020. So it is, second to the treasury market only in importance of financial instruments, and even much bigger than, I believe that's still the case that the total debt issued by Fannie and Freddie is, bigger than the market cap of NASDAQ companies combined. So huge footprint. And obviously, for those approximately 2/3 of Americans who own their homes, home ownership, their mortgage is their biggest liability, their biggest asset in the house. So it's a very important financial, element. And of course, mortgage payments and rent tend to be, your largest monthly expense often, at least for most of us. So it's an important financial market implication. It's an important household implication. And it's also the case that Fannie and Freddie debt, as we saw most recently with some particular banks that were stressed and held a lot of MBS, their debt is spread throughout the financial system. And of course, the Federal Reserve since 2008 has been buying mortgage-backed securities. So it's also a very big transmission mechanism for monetary policy.
And I mean, this might be a silly question, but do you know any reason why they're named that or referred to as that?
There are abbreviations. I mean, the names are like Federal National Mortgage Association, and someone just says, So there is. So the charters don't actually say Fannie Mae, Freddie Mac. That's not what Congress called them. They call them like Federal National Mortgage Association, and as people are want to do, they came up with something they thought sounded more compelling. And of course, at this point, the companies have copyrighted those things. Although, there's also, of course, Fannie Mae chocolates, which have existed long before the company and are much sweeter than the actual mortgage company.
So you mentioned earlier that agencies should enforce statutes as Congress intended them to and not as they chose to. I guess, what is the situation on the ground? You said that they don't really follow the law.
Yeah,
but what does that look like?
I mean, sometimes it looks quite disappointing. I have found that certainly even more. That's perhaps one shocker from coming out of government was certainly as a libertarian, you're frustrated enough with what Congress passes, and you're frustrated, enough, with what agencies do. But I would say there, unfortunately, the day-to-day at many financial regulators is to view elements of the law as somewhat optional and advisory rather than feeling bound by it. And of course, sometimes it's nobody has a right to have standing to sue, which of course is what we're seeing in the student loan debate, whether who's got standing to take it to the Supreme Court and such like that. So sometimes it's just agencies get away with things because nobody really has the ability to sue to make them not do it. More often the case, they get away with things because interested parties benefit from it. So ignoring the law. So for instance, there really is no constituency for safety and soundness in the financial system. I certainly found regulating Fannie and Freddie that I had almost nobody come in and lobby me to make them safer. So that was not the lobbying that went on. The lobbying was almost exclusively to make them less safe. And so, it's also one reason why it's important, that the law is not only a limiting factor for agency heads, but it's also a shield. I mean, to my pleasant surprise, I did find that when I often told lobbyists, like, well, that's nice and all, but I can't do that because I don't have legal authority to do that, 99% of the time they kind of sucked it up and said, okay. I mean, again, they weren't delighted to hear that answer, but they respected it. And I think but you can only really get away with that if you consistently take that approach. I mean, once you kind of deviate and you develop a reputation for bending the law, then your life as a regulator is constantly negotiating your surrender, if you will. So you really have to start out with well, whether I like it or not, I'm going to follow the law. Because again, if you just take the view of I'm going to enforce the stuff I like and not do the stuff I don't like, then it really just becomes, again, a morass of negotiations with interest groups to survive. So you don't want to do that. And the pleasant thing, again, is that while many agencies have a culture of not taking the law seriously, and unfortunately, I think FHFA was probably more along that spectrum than other agencies, although obviously the Federal Reserve and financial regulators writ large have a long history of pushing the boundaries of the law, if not going beyond them. And so to me, one of the things I tried to accomplish both through example during my time running an agency, but also through the book, is to really kind of encourage the conversation to get back to, again, what I call Article 1 constitutionalism, which is Congress writes the laws, and the regulators should not be spending their time second guessing the will of Congress. I mean, and again, even if you think Congress is wrong, so what? That's not your job as a regulator. Of course, as a private citizen, yes, go write your member of Congress and tell them you think they're wrong and vote them out and put someone in you think is right. Do all of those things. But that's not the job of a regulator. And I do worry that we've way past the point of regulators feeling like they should, suck it up and just follow clear congressional intent. And that's not to minimize the areas where Congress has been silent, but I mean, I've definitely just seen way too many examples of agencies doing things that would completely contradict what the statute says. And so, and again, that is the most frustrating part, because even if we can get Congress to write the right laws, how do you get the government, the executive branch, to actually enforce them correctly? So it's a tough thing. And again, there's a constant pressure on a day-to-day basis to bend the law.
You wrote the statute that created the FHFA. Those letters together is a mouthful.
I should have come up with a better name for the agency.
So you wrote that statute when you were in the banking committee. Shouldn't we be a little skeptical of you creating a government agency? I mean, you seem pretty principled.
Sure. I mean, so again, I think if you're gonna be a small government person serving in government, there is, as economists kind of say, the second best. And so, first best world, you don't have a Fannie and Freddie. But if you're gonna have a Fannie and Freddie, and you're gonna have a regulatory structure around them, you have one geared toward controlling the systemic risks, the risks of the system that they represent, so that you can minimize whatever implied subsidy there is. And so, again, this is the hard part, I think, for the threshold to get over if you're a small government person, which is you're not gonna get to do it the way 100% the way you want to do it. But if you really be part of the process, you can move the process in the direction where it's better. Now, I understand that some people might, well, why bother? But, I mean, these things are big and important. They're large footprints of our economy. For instance, I mean, yes, I drafted, negotiated much of the law that created the agency, but, I was a staffer, and I worked for one senator who had one vote out of 100. So, is it the law that I would have written if I had free hand and had no necessity of negotiating 100 senators and then negotiating with the House of Representatives? Of course, it's not. But it's what I thought we could get done as an improvement. So certainly, much of my career has been, either how do I get the least bad option, or how do I get a modest positive option over the status quo, given where the status quo was at. And I certainly again can understand the frustration of that's a lot of work for maybe a couple of yards down the field, if you will. But again, those things add up. They can be pretty big. And again, one person in the right place can make a difference in that regard. And I also would say, writ large, I think you have a much better chance at limiting government if you have an actual understanding of how it works.
And I mean, as skeptical as I am of having an institution with certain incentives, that even if you put a good person, not what's the best way to say this?
Yeah,
Even
yeah,
if
I know.
you,
I 100% agree with kind of the skepticism you're raising, and so we should never pretend to ourselves that and as I often say to my friends on the left, I mean, you had your chance with President Obama, and he ended up being the porter in chief, and continued all of the things you hated that you thought you didn't like about George W. Bush, and so we certainly should not have this pretense that we can fix government by simply having the right people in place. And in fact, I think the libertarians generally bring a real skepticism of like, no, it's not like we're just trying to say let libertarians govern. The old joke about we're trying to get rid of government and make your own decisions, and that certainly should be our guiding principle. So certainly one of the things impressed upon me is that I was such the anomaly for that, not just for that agency, but regulators in general. So if I could be immodest, I could say, there's not enough of me, and the odds, and it was a very random and unlikely path that led it to me running the agency rather than the pressures and norms of how appointment processes work in Washington. I mean, I think it's fair to say I may well be, certainly the most free market person that's gotten not confirmed by the Senate Banking Committee, and maybe there are people more free market that actually made it through the Senate, but there was a very narrow path and not really one that you can count on repeating. So yes, we should. I'm of the view that primarily libertarians should try to influence the broader public policy conversation with the public and with Congress, and do their best to try to shut down agencies. And again, obviously, there's a broader debate with some on the right about industrial policy and other things where the view is kind of, well, we'll just take over and we'll run it the right way. No, I mean, at best, you're running it half the time, if then, and you're going to be highly unlikely to ever have the right person in place. So I don't think my example should be, yeah, if we just get the right people in place, it'll be okay. That's not my lesson. But my lesson is that we should try to occasionally get good people in place to make those arguments. And I do find that, for good or bad, having served in government and having run these things, that I have a lot more credibility with members of Congress and the media on talking about these issues than I did before I was in government. And so therefore it's a more effective voice for limiting it. When people hear me say, listen, I've been in that seat during a crisis, and this is why I think that's the wrong decision, it gets a little more credibility than if it's just me on the outside. So I'm not saying we should necessarily have a libertarian serving government just to reviewed as more credible, but I think we should do it because in the interim, until we get rid of those agencies, somebody's going to be sitting there, and I'd rather have somebody who has a constitutionally based libertarian small government perspective than to have somebody not, because I've seen too many times what happens when it goes wrong.
you were in such a unique position to have first been in the banking committee and then to be the director of this agency, and then to have the principles and get to enact and understand what the goal and aims of the agency were. So, can you tell us a little bit about what the agency is and what it does? And to affirm you, and to use a phrase of my generation, to gas you up a little bit, what have you achieved in that with the agency?
Sure, great question. And so the primary purpose of the Federal Housing Finance Agency, FHFA, is to regulate Fannie and Freddie and the federal home loan banks. And again, that primary purpose is to regulate them in such a way as to essentially reduce the moral hazard from the implied guarantees that come around. So basically make sure they don't blow themselves up and take down our housing market and economy with it. And I think that's an important point because so much of what came after 2008, I mean, I believe we would not have had Obamacare, for instance, had we not had the financial crisis in 2008. And obviously, you can go back to all sorts of examples in history where financial crises have led to massive expansions of government. And so to me, it's really important for us to try to make sure we get the financial regulatory system right, because the aftermath of getting it wrong is extremely painful and goes far beyond the financial system. So in terms of trying to make sure Fannie and Freddie, don't fail and don't blow up and don't, leave millions of people into foreclosure and lead to a perhaps massive expansion of government in response, we greatly reduced the leverage at Fannie and Freddie. So when I walked in the door, they were 1,000-to-1 leverage. That is, equity to assets. So they were almost certain to fail in a crisis even pre-COVID. So we raised a lot of equity. We cut the worst tail of the risk. And just like as we saw in 2008, where a lot of lending was done, pushed by government in an irresponsible manner, we made lending a whole lot more responsible during my time there. And again, it's not like we mandated anybody had to do this. They just couldn't sell those loans. And that's the important thing to keep in mind is Fannie and Freddie and HUD, FHA and HUD lend in a way that no sane person would lend their own money. So how do you bring back that sanity to essentially mortgage underwriting so that you have a sustainable mortgage system and a sustainable economy? I was only in the job about 11 months when COVID hit. So that clearly and understandably hijacked a lot of my agenda. But we were able to lead a response so that maybe to compare this to, say, the 2008 mortgage programs. We helped twice as many people 6 times as quickly, and we managed to do it at pretty much zero cost to the taxpayer, whereas the cost of the mortgage programs in 2008 were in the neighborhood of about $30 billion. So have saved billions of dollars for the taxpayer, and saved, and again, and also, I think I showed that there is I hate to kind of use the phrase third way, but what I mean by this is, often in financial crises, we're told it's either, bail everybody out or liquidate everybody, or, there's a perception that libertarians are, the cold and heartless, which of course is not true. So I did what I thought any business would do, which is you tried to make sure that the people you lent money to were in a sustainable situation, and you tried to do it in a way to minimize losses. You didn't do it as charity. You didn't do it as a subsidy. You didn't do it as redistribution, but you did it and as how a business would do it. And the fact that there were segments of the mortgage market who could make up their own mind and do their own thing, who largely copied what I did, I think is a testament that we largely found a business-oriented free market approach. But we also said you can actually help people, which many business owners and businesses are compassionate. And so again, this is not a kind of Bush squishy compassionate conservatism, but a really hard-nosed, but also like, we can do this in a sustainable way. So I wanted to show in a sense that you can, in a crisis, govern in a principled manner that helps people. And the solution is not just to say, I'm going to sit on my hands and do nothing, but I'm actually going to do something positive and productive and helpful. And that's what really we entered, because again, the options are people just in crisis do all sorts of crazy things that have become the norm. And we did this as opposed to one of the other crisis responses. So, for instance, we set up forbearance programs with landlords that were optional, and the landlord could enter as long as they agreed not to evict anybody for non-payment of rent. And so we made it voluntary as opposed to, for instance, the CDC eviction moratorium. All of our programs are voluntary for people to participate in. And we charged fees in Fannie and Freddie's market that were voluntary. Like you could completely avoid it by not selling any loans to Fannie and Freddie. So we did things in a largely voluntary, business oriented, again, paid for itself, but also focused on helping people. So again, what I wanted to demonstrate was, there are libertarian ways, or small government ways that work a lot better than the alternative. And I think that wanted to be the important message, which is there is a right way to do this. And the fact that the way we did it was largely applauded by people across the political spectrum, I think says a lot. And so you can do this in this way. And ultimately, like the kind of the tagline of the book is, you can help Main Street without bailing out Wall Street. And I think wanted that to be the takeaway, and hope to have set a roadmap up. And of course, again, a lot of background information and things on the inside of crisis conversations. And you get to have a little bit of view into, conversations and debates I had with Jay Powell and Steve Mnuchin and another cast of characters.
One thing that I'm beginning to realize is that no matter what the cause of a crisis, whether 2008 with the banking collapse or 2020 and the pandemic, that financial institutions and industries seem to immediately ask government for rescue in different ways, and there are different scenarios and circumstances around it. But even in terms of the Silicon Valley bank run, we're seeing it today. And I mean, I guess I would say as a general rule, the incentives that are inside government cause companies, or I don't want to say incentivize so many times, influence companies to feel free to ask and pressure for a bailout. So, I mean, do you agree with that? And what are the incentives within government?
I mean, we certainly allow the norm to develop where asking the government to cover up your mistakes is more common than I would like it to be. And more, and I don't know whether it's more common than it used to be, but it's certainly common enough, and certainly more common in the financial sphere. And so certainly one of my intentions with the book is to help reset that norm. That there should not be an expectation that capitalism is not just it's a profit and loss system. It's not just you get the upside, you take the downside, and that's the expectation. And so, that's one start of it, so that, people in government are going to be in less pressure to bail out if there are less people asking for bailout. So we do need to essentially name and shame, if you will, those who continue to come to Washington and ask to be bailed out for their own mistakes. And so that's a big part of this. Having sat in that seat, 95% of the pressure you get is to bail people out. I mean, you don't get let's push back. And, as I call, there's a sort of, when in doubt, bail it out philosophy that dominates a lot of government. And so I talk about this in the book where my interactions. So for instance, part of the book is the discussion about whether mortgage servicers, which are those who kind of collect the payments and from the borrower and forward them to the investor, whether they should have been rescued or not in 2020. And there was a big demand to rescue them because of the forbearance programs we set up. But so, for instance, I talk about some of my interactions with the Federal Reserve where the question was whether the Fed would set up a so-called 13-3 facility for the mortgage servicers. Now, the Fed set one up, but they needed under law to get the Treasury Secretary to approve it for them to essentially turn the key and use it. And at that point, the Treasury had been heavily reliant on what I was seeing, what we were seeing to make his decision. And we just weren't seeing, we had data on, I think at that time, there were 346 non-bank servicers that Fannie and Freddie did business with. I had their balance sheets, I had their income information. We were on the phone with probably the largest 20 immediately to figure out, how stale the data was financially. So we were really trying to gauge, is this a bailout that's needed or not? And so we were taking a ask questions first approach, whereas I think much of the rest of government took a, bailout first, ask questions later approach. And again, as I talk about in the book, I regularly had these calls with Treasury where the Reserve, where they were like, well, aren't you, just let us know. We're ready to go. And, you could tell Treasury this. And I'm just sort of like, and again, they all rarely did they ever actually offer any fact or data. It was a sort of like, you know, we're ready to rescue people. And unfortunately, we need other people's permission to do it. So please help us get that. Or, and there was never a skepticism there. It was shocking to me how readily the Fed kind of leaned into just, again, rescue first, ask questions later. And again, we were looking at the data. And this was, again, one of those, anomalies where, I had spent 20 years studying the mortgage industry one way or another, and Secretary Mnuchin had worked at a mortgage lending operation, owned a bank. And so between the two of us, he and I had a pretty good understanding of the industry. So we knew, and we were relatively skeptical. And, it ultimately came down to Mnuchin just not seeing the evidence for a bailout. He left it to me to somewhat be the public face of that. I could have, of course, kind of kept my head down, but I felt to go back to 2008 crisis, I felt for me, the lesson of Lehman Brothers was that, if you lead an institution to believe it's going to be rescued, which the assistants of Bear Stearns led Lehman to do that, it will not take the actions necessary to avoid a bailout. And so, for instance, we know historically Lehman had at least 3 offers to be bought, and all said the number was too low and held out for better because they figured they always had the government as an option. And so I was out there vocally saying, listen, mortgage servicers, you need to go out and raise capital, and you need to fix your balance sheets. And again, we knew the ones that were riding the lines, we knew the ones that were fine. And I was out there because I didn't want them to behave in such a way that they could count on a bailout. And, I don't name names in this instance, but I tell enough that if you do a little Googling, there were at least 2 large servicers who had private equity parents who pulled a lot of money out. And when we let them know that we were not going to rescue them, they put money back in, which is the way this is supposed to work. So it's a real success there. But I can tell you, I mean, I had, the Financial Times and many newspapers, Bloomberg, people writing opinion pieces that I should be fired and run out of Washington, and people accusing me of bringing down the economy, and almost nobody applauding me. So, there was, despite what we may hear from the progressive left, the Elizabeth Warrens of the world were not out there cheering me on. Fortunately, they were rather silent, so they weren't demanding me to do a bailout either. But it was certainly a lonely time, but that's fine. It does say, don't go in to these kind of jobs if you have an obsession with, approval from people, because 95% of who you engage with on a daily basis in an agency are interest groups, who have a financial stake in the operations of that agency. And so one of the problems we regularly see in government is even good-willed people, have a natural inclination to want to get approval. And the people they appear in front of regularly are the lobbyists who want something. And so, it's unfortunately the case that, you're not always going to get, as they say back in Calabria, Italy, the Tura Desta, the hard-headed. So I have a reputation around Washington being a little stubborn and hard-headed. And that's arguably what you need a little bit more of in government. But there's too little of it. And again, going back to our earlier point, you certainly can't count on getting that. But I do think it's worth observing the pressure is asymmetric. It is overwhelmingly on the side of throwing assistance. And again, we've reached a world where there's not enough criticism of it. And again, this is why we're seeing obviously the Biden administration trying to tell us that rescuing uninsured depositors is not a bailout. So you get into that dance, which is unfortunate because, again, you have to be a little tough and you have to know what you're talking about and you have to do the research. So none of it's easy, but it's important to have it there and important to show it's done. And really, again, the reason I wrote the book was I wanted to show people who wanted to stand up against bailouts, there's a way to do it, and there's a way to do it successfully. And here's kind of the way you need to do it. And here's the prep you need to do. And here's the kind of attitude and skill set you need to bring to it.
It's crazy how detrimental, but also not detrimental, sadly, the too big to fail mentality is. Like, you have the president or CEO or whatever of Delta Airlines saying, well, we can do whatever we want. Government has our backs. And that's just not right. And we have people like you on the inside who have done things that have really succeeded in changing the way that things are done. I guess like the next step is to recreate that. So, I mean, in a moment of reflection, I guess, what do you think has been the most successful about the model of the agency, the maybe the people, the methodology? What worked and what didn't?
It's a
Almost. I
great,
know
it's a
that's a big question.
No, I mean it's a great question, and I'll start with, as you mentioned, the Delta. I remember one time I was walking out of Treasury Secretary Mnuchin's office during the pandemic, and passing me on the way in was Doug Parker, then CEO of American Airlines, and certainly we're saying that it's not just the banks, the airlines, the auto companies. I mean, we have a lot of too big to fail companies that come in to have expected bailout on a regular basis. But the interesting example of this is, what struck me as interesting was that, the airlines went to Treasury. There was almost no real role for the Department of Transportation, who unfortunately are generally pro airline bailout anyhow. But to draw a contrast here, one of the reasons that the mortgage sector did not get a rescue was because Mnuchin and I between the two of us, had a fairly deep understanding and knowledge of the industry, whereas there was nobody really at the table who understood the airline industry. So the ability in people in government to say, that sounds a little fishy, was pretty limited. And so one of the lessons here, both for, I think, libertarian career development are in government and writ large, is you will only be effective if you were fairly well equipped. And at the risk of being slightly modest, I endeavored 9 times out of 10 to be the most informed person in the room on the topic, and I could. And it gave me the ability to say no to crazy things like bailouts, because I did know what I was talking about. And certainly a lot of problems in Washington is that people often just have no clue what they're talking about, to be frank about it. So if you want to be effective in trying to fight back against government or whatever, whether it's bailouts or regulation, you really do need to do the hard work of learning the programs, learning the law, and being the expert on it, and being able to argue the opponent's position better than they can. So in a sense, you have to be twice as fast and twice as good, and sometimes twice as smart, if you will. Because again, the presumption's always going to be toward bailouts and toward the industry. So, read your Hayek, but you can't go in there and just simply say, government bad, market's good, which of course is right, but it's not enough. And so I do encourage, if you want to have, I think the biggest impact, and we see this all the time at Cato, trying to hire where, I joke that everybody wants to be the next David Bose, where they're the Renaissance libertarian, and there's only room for one David Bose. I hate to break it to people, but there's lots of subjects.
I was going to change my name.
I know it's frustrating, but there's lots of room for, there's constantly, looking in areas, like for instance, Cato. I mean, in the almost 10 years I've had so much affiliation with Cato, we've yet to be able to find a really good labor economics person, for instance, and that's one example. And there certainly are other examples of where, we're really struggling to find staff who have an expertise in a particular topic. So what I would say in a positive is, if you had asked me when I was 18 or 20 whether I wanted to become a financial services mortgage expert, my eyes probably would have glazed over. And what I want to say is that it's been far more fascinating than I would have ever expected. And I think you will find, certain areas, policy areas, far more fascinating once you're kind of in them. So it's a kind of career advice, kind of figure out a policy area where there aren't a lot of libertarians, and make yourself the libertarian expert in that policy area. But it really does require becoming an expert in that policy area. And of course, people should reach out and ask Cato, what are the things you guys are looking for where you feel you don't have areas covered? And people at Cato, we know what areas where we don't have the expertise we'd like to have, and people will share that with you. And again, you can make a huge difference, and you get, you can get a lot of interaction, and you can have a lot of impact if people look at you as the most informed person. And I will say, in both a positive and a negative way, it's sadly not that hard in Washington to become the most informed person in the room, because most other people in the room don't bother to become informed at all.
Yeah, that's a good point. Are there
I mean,
any
it's not an insurmountable objective.
are there any, I guess, last words of advice or warnings slash things you want us to take away other than to absolutely go read your book because it's great, full of good
Well,
insights, stories, all of that?
obviously there is that, but I want to reflect in terms of learn the issues, learn them better than anybody else. Be open to where allies may come from, and so I developed a pretty good bipartisan relationship, even though, I didn't get any Democrat votes when I went through the Senate. There was the opposition was half-hearted. There was a relationship there. They knew they could work with me. And so engage with people, you know, spend more time trying to add friends than trying to add enemies. I do think it's a lot of libertarians spend a lot of time trying to say what they're against and who they're against, and not enough time saying what they're for and who they're for. And also recognize that, as I say, it's you know, I'd like to live long enough to see a libertarian majority in Congress, but I doubt it. So whatever libertarian policies we see put in place are going to be put in place by Democrats and Republicans. So, find allies within the system across the aisle, and really kind of leverage that. And again, you can make a big difference in that. Agencies during comment periods, for instance, almost 99% hear from the industry impacted are, advocates who want some piece of the subsidy. I mean, the entire Fannie and Freddie debate is driven by the financial services industry and people who want to lower lending standards because they want to either expand homeownership or run up house prices and or spread out the subsidy. There's almost no real public interest input. And, a lot of organizations, predominantly on the left, have really developed over the last decades a real infrastructure for public interest input. And I just think that having one voice at the table from a libertarian, this is what's good for society input can actually influence the process because, the regulators simply aren't hearing that. And so I don't think you can assume that. It's easy to assume that, well, the special interests win. Why bother raising my voice? And I don't want to minimize the degree to which the special interests do often win. But I guess I'd put it this way. Political equilibriums are more fragile than you think they are. And you should try tilting at them more often.
That's some good advice. It kind of reminds me of when Uber was first getting started and a lot of regulators banned it in certain areas. When you would go to open Uber, it would immediately pop up, send a letter to your representative and like in that area, and it would have it preloaded so you could just press send or like write your comments. And that's the sort of thing that I think companies can do. But obviously once companies get power, naturally they start asking for bailouts. But, that sort of stuff makes me really hopeful. Once again, I'd like to thank my guest for their time and insight, and I'd like to thank you for listening to the Great Antidote podcast. The Great Antidote is sound engineered by Rich Goyette. If you have any questions, any guests or topic recommendations, please feel free to reach out to me at thegreatantidote@gmail.com. Thank you.